A bit of an improvement today on the markets, but they really seem to be in a bit of a sideways pattern at the moment, don't they?
Completely. We keep on talking about it. They've been here since, I think, early August, so we're going into almost the second month of the markets moving within a very thin interval of about 1,000 points on the top 40, speaking about that specifically. We actually just saw we back at resistance of about 22,800. It's very, very important on the futures side to see what's going to happen there, because obviously we've got futures close out relatively soon. So 22,800 thereabouts is a very, very important key level for us. We don't really know what's going to happen, until we see kind of a breakout above there or a massive sell-off below the 1,000 point support level of around about 22,700. So it's a very interesting kind of 21,700 rather. It's a very interesting push and pull factor. So what we're doing is we're trading it a little bit, buying it off support and then selling it off resistance. There's a small differential of about 4 or 5% there, but that's okay for the moment.
And which do you think is more likely, the sell-off or the rise?
It's a very good question, actually, because I mean, obviously everyone's talking about, we really run hard since March. Some overseas markets up 50%. Our market up a very, very nice amount, from 18,000 points up to 25,000 points on the all-share index. So is there more life after 25,300 points? And it's a really hard pill to swallow to buy some of these stocks that have literally doubled overnight. But the feeling out there and the sentiment out there is certainly still positive. We want to see this market go up, but the economics and the fundamentals are just not there yet, in our opinion. So we're incredibly cautious at this level. So we're not completely gung-ho, but if we do see further movement above these critical levels, it certainly looks interesting for a further rally. However, on the other side of the coin, to remain cautious is incredibly important, considering that we've upped so heavily since March and we don't really have the fundamentals to back it up yet. It is a lot of hot air, a lot has been done, but we really now need to wait for the consumer to take over to see if we can get things going again in the real economy.
Of course, we were listening to Daniel a moment ago talking about this wall of money that's been coming into our markets, into the bond market, but also into the equity markets. And lots of that has been foreign inflows, hasn't it?
I think a really, really good thing is to look at the construction stocks, and you were speaking about it now to Sean, and you saw Avenge and Marion Roberts move up tremendously. In our opinion, our house view, that's very much a foreign influence at the moment, and we saw it in about 2006 when these things took off again. It was really foreign money that was pushing our construction stocks.
Why do you think it's foreign money?
Well, it looks like the foreigners, because generally speaking, South Africans tend to be a little bit negative about their own economy, and foreigners don't seem to have that view. It's just a general trend that we've actually seen. And if we have a look, we've seen about a 60 billion rand inflow just on the direct equity market, where we saw similar outflow the whole of last year. So we've already recouped all this money, and there's still more coming all the time. And having a look at the construction index in general, it's actually one of the most undervalued indexes compared to all the other indices that have increased. We've got, the industrial index almost back up to where it was, before the market crash. We've got the resource index up quite tremendously. We've got the financial index up. The little construction index is still down a good 50% from its high. So I guess foreigners, being a little bit more positive about our economy and therefore the infrastructure, are looking at this index and saying, well, look, this is pretty undervalued. The results are out on these companies. Things still look very solid. Maybe there's an opportunity there. I mean, Avenge and Wilson Bailey Holmes and Marion Roberts are still way off their all-time highs, and possibly some good bargains there, actually, from their point of view.
Well, you mentioned the financial index, and of course we had Old Mutual moving up 3% today, trading at 11 Rand 80, and of course that's a share that went right down to around 5 Rand.
I actually remember when that was like 4 Rand 60, and we were know this company's going to shut their doors, because that was the talk of the town, and I think the guys that really had the guts to buy it, they did incredibly well. That rallied, I think, up to about 13 Rand. What it's done now, it's pulled back from 13 Rand to 11. I was checking the graph out. There's a little bit of support at about the 11 Rand area, and it's interesting to see that it is bouncing quite nicely. So I would expect that stock to move maybe to 13 Rand, but it's not something I would consider holding. I'm certainly against my financials and insurance companies at the moment.